Government shutdown is almost over. Already, the market is bullishly reacting to it. What do you need to know and how does it impact your portfolio? Will this rally sustain? Let's take a dive into this. So, first off, we already have seen several days of market rallying, as you can see here, as this rumor and news now is coming out that any day now this is all going to be wrapped up. Now, there was going to be a short term uplift in equities. Why? Well, there's going to be improved sentiment in the markets. This lower volatility from that. You're going to see things ease up on the interest rate and yield markets. And that's certainly going to create this little bit of an air pocket where markets are going to have room to run a little bit higher, especially considering how very oversold we were just last week when we were looking for that potential swing in the market at that critical pivot. So the question now is, where is this market going to go, and can this be enough to keep this market rally going? So when I'm trading, what is it that I think is very important to put into context here? Well, number one, there is very little historical evidence in the market that there's going to be a huge sustained rally after a government reopening, after a shutdown. There's been plenty of these. Most of these things are very transparent. Most of these people know what's the impact on the markets and what it's going to mean. So it's not really something that you should be expecting to have sufficient energy behind it to alone run a new major rally. There will really need to be other bullish catalysts to keep this going. In many ways, actually, much of this is already being priced in. So let's quickly do some technical analysis here on the markets. That now that we've seen this swing low, we were at the edge of a cliff when we were doing that live stream together, talking about how critical it was for the bulls to come in right there, right then, and save the market, and they did. It was a textbook reversal off of a critical point. Now that the market has been off that levels, we do have a measured move on the S&P futures that takes us north of 7,000. You can see that red zone in the 7,000 to 7,100. That's a measured move. At the same time, the previous highs lie here around 69.50. This is important because I still am in the frame and in my view that this market is transitioning from a bull phase into a distribution cycle. Now, distribution cycle precedes that of a bearish down decline, and this is where technically a lot of the traditional patterns of topping formations form. Topping formations include things like a double top or a head and shoulders pattern, and that is there. While we have all these technical terms for it, what it really is where buyers and sellers reach an equilibrium, which is every time the bulls try to rally it, there's ample supply to be selling into the rallies, which causes the market to stall out and not make any meaningful progress on the upside. And that just forms these kind of consolidation periods along the market top. We're going to see something like that. But there is something interesting about the 7,000 round number. Markets are very magnetic to these kind of round numbers, and the media loves this stuff. So the idea here that this market temporarily breaks to a higher high up to 7,000, just so that the CNBCs of the world can come out there and like, oh, 7,000 S&P, how exciting, the bull market's going. That actually has a very reasonable chance of happening, and that often is where you get key fake outs in the market. So the idea here that this market bullishly impulses, prints 7,000, gets everyone excited, and then fades off of that is actually a very good starting scenario to build here. And so, if I was to give an analog, we have some sort of bull impulse that follows through, and then we fall back into this consolidation zone. I continue to think that the most important thing is actually going to be real data, and that's going to determine what's next for this market. Now, we're already seeing inflation numbers coming in somewhat in line. And at the same time, we're about to get a big wave of critical jobs numbers. And there's going to be jobs numbers that are going to push right into that December Fed meeting. All of these are going to be revealing as to whether a weak labor market is going to drive a far more dovish Fed, and will that in some way or another, put stress points on equity valuations? I think that's a focal point, but the real big one in my mind remains Nvidia's earnings. Nvidia is the general of this bull market. This AI driven bubble has been led by this $5 trillion behemoth of a stock, and its earnings are coming out next week on Wednesday. And so we have a scenario where I don't see any reason why this market would do anything different than what it's been doing right now for the last few days until we get there. And so in that window between now and next week, we have 1 week where the market could easily throw 100 S&P points on the upside, print that 7,000 on the cash index, which would be about a 150-point rally, but totally on the table for that kind of a move to potentially happen on the short term. And then Nvidia's earnings will play a critical role. We're going to, a few days later after that, get past the critical monthly OPEX, where we right now are going to see the all sorts of gamma influences on all the huge open interest of options. Once we get past that, the real excitement in the market is likely going to be in the final week of November, going into that December Fed meeting, where we could really see things get spicy. So on the short term, expecting the market to do a little bit more of the same. So how am I trading it? Right now, I'm positioning myself on this, that at least for the remainder of this week, we're going to see a little bit more of the same. So you can still allow some of these markets to press a little bit higher. My focal point will be next week, especially if the market is a little bit higher elevated levels, where we're going to want to explore how to lock in that advance with protective hedges and other things. That's all going to be a focus next week before Nvidia's earnings, and that's what I'm going to do with my members during that period, is to ask, like, what is it and how is it that we should be positioned on it. Very quickly, I just want to touch on a couple of other markets. One of the things that we'll see if the market is moving toward a risk off is very likely have a bullish breakout in the US dollar. You can see this bull flag. It's been almost a month and a half of trading sustained above its 50-day moving average. Is this US dollar going to shock everyone with a rally? Everyone is so consensus bearish the US dollar that if a US dollar starts to rip, it will structurally unwind the reflation trade that has been running so strong for the last 9 months and driving so many different equity prices during that period. This could be a huge stress point if that US dollar breaks out here. The other thing to watch also is whether the long bond, I'm going to focus here on the 30-year using the ZB futures, recovers. While we had this correction down to the 50-day moving average, not much different than what the S&P did, will we see a bull breakout in this? If we have a dollar and bonds both rallying, those are risk-off assets, and therefore it will be a stress point for the markets. And if we see that things like junk bond prices are failing to follow through on the upside, and the breadth of the market stays poor, then that really is going to continue to build further and further evidence that the stock market is at a very, very vulnerable moment, and that we'll be definitely looking at that toward the end of November. So nonetheless, back to this government reopening. A chunk of that's already been baked into the cake. The market always prices this in anticipation of it. So the rumors are already being in there. I don't see a long-term bull case to be made based on the reopening, and much of the short-term tailwind has actually already been baked in. All right, so have a good trading day, everyone. We'll keep you up to date.